Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, multiple times the market was rejected to the upside. And what we can notice is that at the moment the market is testing this exact same zone. Therefore, there is again the possibility of seeing yet another rejection to the upside away from this zone. That is definitely possible. So from a monthly standpoint, we have to keep in mind that we are testing strong historical support. And let's drop down on the weekly time frame. Now, from a weekly standpoint, what we can notice is that in creating this push to the downside, the market has created this M pattern. Now, generally speaking, after the creation of an M pattern, there's a good probability, in my experience, to see a potential push higher. Now, it's obviously not every time, but when there is such pattern, the market usually then goes and completes the pattern at the neckline. We can see an example here of an M pattern. The market then went and completed the pattern at the neckline. We can see another example here. The market then went and completed the pattern at the neckline. So it's not every time, but when there is such pattern, there is usually an increased probability of seeing a potential push higher. We can also notice that also from a weekly standpoint, this area is in fact strong support. We can see how it was tested multiple times, and at the moment it is being tested once again. Therefore, there is a good probability of seeing a potential push to the upside away from this level. Now, dropping down on the daily time frame, what do we see? Now, from a daily standpoint, we can notice how the market is currently testing precisely the previous daily low. This means that this area was acting as previous support, and there is a possibility for a potential double bottom to be created at this area. But to see that, we would need to also see some institutional longing. However, if we go and see what we have when it comes to the commitment of traders, so what the big players, so institutions in the market are doing, and we look at the data precisely for the NZD, the first thing that we have to keep in mind is that if we're looking at the data for the NZD, we're actually already looking at NZDUSD. And what we can see here is that with the last reports, actually net positions have been decreased. Institutions are still moving to the bearish side for NZDUSD, which is no surprise considering how aggressively the market has been trending to the downside. So we still do not see strong institutional longing with minus 18k net positions and currently 40,000 shorts compared to only 21,000 longs from an institutional perspective on NZDUSD. So we need to start to see net positions being increased before there is an increased probability of seeing a potential rejection to the upside away from this level. And by the way, if you still haven't, make sure to join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, first of all, considering that this is a previous low, a lot of people that longed here most likely have their stop losses around this area, so below the low. So if institutions want to long, if there is a stop hunt, that could give the possibility for liquidity for institutions to actually start longing this pair and then create a potential rejection to the upside. That is definitely a possibility. And at that point, there is also a good probability to start to see net positions being increased. So if I do start to see institutional longing, at that point, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area, potentially also completing that weekly M pattern that definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.